It's your money. It's your retirement. And it's your life. I would imagine 100% of you would say, that's right, Drew Pelton. It is my money, my retirement, and my life. And that's why I say, yes, 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 of course it is. And that's why you need to want to get it right for you. What's it? Retirement investing. How do you truly, truly invest for success in retirement so you go the distance in comfort, in confidence, and with peace of mind? You're listening to the Retirement Income Source, and I'm your host, Drew Pelton. Some of you are able to watch this by way of the podcast, but others are listening in on WBRP 107.3 if you're listening in on Saturdays from 10 to 11. And in addition, we, of course, are on WJBO, iHeartRadio, which airs between 11 a.m. until noon Central Standard Time. So however you're listening, whenever you're listening, I'm certain that the information that's offered and provided here will help you with respect to understanding at least how you need to invest during retirement. 1/3 of your life, according to the studies, will be spent in retirement. Now, unfortunately, some may not go that long. But some of you, it could actually be more than 1/3 of your life. And if that's the case, and you're going to live 1/3 of your life in retirement, how do you truly, truly make your money last? That is the key message. So today, I'm going to use the topic of this show, and I always create a topic on the show for the week to give the theme of what I'm going to be talking about. Of course, the radio show you're listening to is the Retirement Income Source. And again, as I said, if you're just tuning in for the first time, because some of you may just be listening in on WBRP 107.3 or however it is, or maybe you tuned in and have been tuning in. Thanks if you're a regular listener. And hopefully you're not just taking information and doing nothing, because true knowledge is power when applied. So today, what's the topic? The topic is shift for successful retirement investing. Shift. SHIFT. Make the shift. Like, if you're driving an automobile, a vehicle that has a shift stick, that's the word we're saying here. Shift. Make the shift for successful retirement investing. So many of you right now are thinking, well, I'm good. I got a good guy. I've been working with him. Everything's good. So one thing I want to say to those of you that may be thinking that, and I want to quickly say, I understand one of the biggest challenges that I have is knowing that there's many different listener types that are listening in. So I have to do this broad brush, and I do give specifics that sometimes may not apply to one group or you, or it may apply to somebody else. And so I would say don't tune out. Just understand that that's part of what I'm trying to do, is reach everybody. But I do know that some people, back to talking about those that might think, well, I'm good, I'm all right, everything's wonderful. Well, why might that be? Well, let me give you a couple of answers why you might think that, but I also am today largely and hugely going to be talking about why that may be a problem if you have your head in the clouds, as in you just think everything's wonderful when you're not prepared. Because in retirement planning and retirement investing, you need to be both prepared and you need to have enough of a defensive position to help you go the distance. As I just mentioned, that most people are going to spend 1/3 of their life in retirement. So you need your money to last for you when you are not working. So back to, why do some people think everything's wonderful and it's going to be okay? I think it's usually because people tend to be myopic, and we, as well as they tend to be focused based upon things that have been working. So what's been working? Well, the last 15 years or so, we'll call it since 2009, and we just got into 2025, so depending on when we picked it up in 2009, I'll just call it for approximately 15 years, what's been happening is the markets generally have been going up hugely. And you probably, if you were in the stock market taking on a lot of risk, you could easily have seen your portfolio grow hugely, immensely, and that's good. But the potential problem with that huge growth is that it could go away if you truly understand long-term market history. So a lot of people get used to, I'm winning, I'll win, markets are good, it's AI time, and I'm going to blend in here something else with this long-term approach, and it is somewhat myopic and it's somewhat long-term, this 15 years of markets going up. But now, what do we have? We have a new president. Well, we have a president that has done something. He's the second person in American history that has done this, where he's had a second non-consecutive term, or he's just launching this second term, obviously Donald Trump. And many of you are very enthusiastic, like I was talking about on last week's show. Some of you may be overly enthusiastic. Enthusiasm's good. And and you should be enthusiastic, but you should be more diligent and you should be more focused on what truly are all the issues. You don't want to have your head in the sand, or you don't want to have your head in the clouds being all happy because you love Donald Trump and everything. You think everything's going to be wonderful. I do think that Donald Trump could have an incredibly positive effect on the economy. I believe that, without all those details, because it's easy for you to pick up or I should say, turn on the TV or look on the internet, because the news is pervasive today about what Donald Trump is doing with all the executive orders, etc. But the key thing is, in retirement, are you making the shift that you need to make, or have you made the shift, and have you truly made the shift to the right methodology, the right strategy of investing? And has that shift been made to the right investment types? Because you can make a shift in your approach, which we're going to be developing today. I'll be developing, and I want you to really embrace what I'm saying, because this fundamental shift to the right types of investments, of investing for income, and that's the key, and that's the bottom line message, is what makes the difference. And so I'm calling the show Shift for Successful Retirement Investing. So what's the bottom line? Well, the shift should be the shift to investing for income. What's the name of the show? The Retirement Income Source. What's the source of your income? The problem is that sometimes people get so caught up in this buy and hold methodology, and they can say, hey, look, I'm taking on risk and everybody's okay. And they're myopic because they haven't really looked at history or thought of history. Maybe when you tell them, you say something, maybe I say something to you if you're thinking like this, which is the things of, well, the stock market went down 50% between 2000 to 2002, or the Great Recession, housing crisis, 2007 into 2007 into 2009. We had a drop that for some was 40% to 50, some even 60% of portfolios were devastated in both these scenarios. So we tend to be myopic, almost like another non-investing situation. How many of you today already, how many of you this year have thought about 9/11? I want to tell you something that I have thought about it only a couple of times because of the fact that I have books in my office, if you come into my lobby, that are about 9/11. And so I see them. So it's easy for me at least to have a quick thought. But I think if you were to ask yourself a couple of questions here, how often did you, just this year, just this first month of the year of 2025, how often have you thought of the devastation of 9/11? How many of you have thought about what happened when the tech bubble burst in 2000 and we had, over a 3-year period of time, a 50% correction in the markets? And how many of you thought just in the last month or so about the correction that happened in the markets between 2007 and 2009? I think as American people, as most of us, we're a strong nation, we're a strong people, and we proceed, and when we have problems, we keep going. And for the most part, that's what we should do, and that's an important part of life. But another important part of life is to understand the importance of making the necessary changes in your retirement planning when you need to, and particularly if you're just about to retire or you just retired, or even if you've been retired for some time. Have you made the necessary shift from an accumulation phase strategy of investing to a distribution phase strategy of investing? Have you made the necessary shift from this approach of taking on risk, cookie cutter mutual funds, to a distribution phase where you have more stability, you have the ability to have preservation, growth, and income mixed in, where you can go the distance? Because retirement investing normally, for most, the studies show, needs to be different. Otherwise, if you keep doing the same thing you did in retirement that you did when you were saving money, you may find that cookie cutter, too much risk strategy, this buy and hold, take on risk, can't do anything, stay put, got to stay in the markets to make money, may backfire. Well, why might it backfire? First of all, it may backfire because when markets go down and you need income, and if you have low dividends and low yields, you more than likely, depending on your situation, will be invading principal. And if you're taking required minimum distributions, that can be between the age of either 73 and 75, depending on how old you are. And some of you had to start taking those distributions at either 70 and a half or 72. The laws have progressed here, if I may say, and given us a little bit of latitude. But everybody knows at some point out of your qualified plans, I mean, you should know that you have to take money out, even if you have enough in pension and Social Security. So being knowledgeable and understanding the importance of investing for income is critically important with respect to making this shift. The shift to successful retirement investing. That's what I'm talking about today. Shift for successful retirement investing. I'm giving away the book today, The Retirement Income Source by David Scranton. I give it away regularly. I would highly encourage you to read this new book. It was just released last year. It's a improvement of his first book, The Retirement Income Story. And The Retirement Income Source, which is the name of this radio show as well as the name of our group's marketing franchise name, is a message of income. Your money, your retirement, your life. The book I'm writing, which is about It's Your Money, Your Retirement, It's Your Life, is all about first understand the power of investing for income and understand how investing for income can help you go the distance. And that's critically important. All right. I'm going to take a quick break. I'll be right back for the next segment. This is an hour show. This is the first segment. I've gone about 15 minutes. Thanks for being with me this morning. I hope you join me every either Saturday or Sunday. Saturday at 10 a.m. on WBRP 107.3 from 10 a.m. until noon. 10 a.m. until 11 a.m. Central Standard Time. And then, of course, WJBO, iHeartRadio, 98.7 from 11 a.m. until noon Central Standard Time. All right, stay tuned. I'll be right back. And actually, let me say this. If you are hearing something that is triggering thoughts for you that are, I need to get myself together, my act together, my portfolio together. I need to know what's going on. I can't take on this risk. I'm not so sure about what Donald Trump's going to do or not. I'm not so sure about markets. Maybe they're good, but how do I go the distance and not lose money? Okay. There was a lot of volatility in the markets this past week. So if you'd like to call us off air or you'd like to get a copy of the book, and I didn't say this, give us a call on 225-831-1394. That's 225-831-1394. That's our office line. We're happy to take a call and talk to you about getting you the book, and or if you'd like to talk to me off air, we'll set up a time to talk with you. All right. Stay tuned so you understand more of the importance and the know-how to get your money right for you, investing for success in retirement. I'll be right back. Welcome back to segment 2 of this radio show, The Retirement Income Source. And some of you are watching me by way of the podcast, and that's good and great. So let me give a little commercial here right out of the gate. So we have a podcast that I simultaneously record and create with the radio shows. So the radio shows, actually, we're on Saturdays every weekend from 10 a.m. to 11 a.m. Central Standard Time on WBRP 107.3 FM. And then on Sundays from 11 a.m. until noon Central Standard Time, WJBO iHeartRadio, that's WJBO 98.7 FM. So thanks for being with me this morning. Today on this show called The Retirement Income Source, and I'm your host, Drew Pelton. I'm talking about shift for successful retirement investing. Well, let's just start with this. Do you need to have your monies invested and invest it right when you're in retirement? Of course. And maybe you don't know this, but is retirement investing possibly, and it is, I'll quickly say, is it possibly something that should be done a little differently from when you were not in retirement? And success. What about success? Anything wrong with success? I like success. Donald Trump, the entire theme is Make America Great Again. I think we can have a theme for you is make your retirement investing great. And perhaps there's no again because you may not even have had an again or previous so that you could have an again. The bottom line is retirement investing is different and normally needs to be different in retirement years than it is in the accumulation phase, in the phase of life when you're saving money and you have earned income. Well, why is that? Well, because when you're in retirement, you don't have earned income. You have no income. The best you have is hopefully some unearned income, and that's the message here, is like, what is your unearned income? What is your passive income? What is your income from your investments? What is your income from income? And what does that mean? Income from income. Income is the yields, the dividends, the interest, all the same thing from your investments. It's different than the capital appreciation of your investments. TR equals I plus G. Total return equals income plus growth. And when you're saving for retirement, when you're working in your working years, pretty much most people have a mindset of R equals G. My return equals my growth. And that's their formula, because nobody's, generally speaking, 99.9% of the time, virtually 100% of the time, when you're working, saving money, you're not taking income out. So you're not thinking about this fundamental financial what is an investment formula of I and G. I mean, you know of it by way of mutual funds. You hear of, well, I have an income and growth fund. And then what does that mean? Well, you have bonds, income. That's generally what that relates to. I mean, it is what it relates to. And you have the G, which are stocks. So it's typically known as a balanced fund. The key is, with respect to retirement investing success, is do you need to make the shift from this strategy you utilize when you were working to a strategy when you're not working? Because it's different. And some might say, well, what's different about it? You just invest, you got to put your money in, and you just let it grow. Well, what's different is, in savings mode, you're just putting money in, you're just adding money, you're getting a match. But when you are distributing money in your retirement years and not adding, it's a totally different time of life. And if you don't have a strategy that adequately matches this phase in your life, you could have major problems. And if you don't make the shift and you think you can continue in the same fashion that you did when you were working in retirement, more than likely you're going to find at some point that strategy is going to backfire on you. Now, back to what I was saying earlier in segment one. In the early on in segment one, I was talking about how people get myopic. They get caught up in doing things a certain way. They think, even if you are in retirement, you're thinking, well, the markets have been going up. And it becomes, unfortunately, void of market history and considerations that can happen in retirement, needs for lump sums for various reasons, whether it's health care, medical expenses, whether it's family, whether it's house needs repair, or whether it's just the cost of retirement you didn't plan for properly. Like, it costs money to go on very nice vacations, and it costs money to visit family if they live out of town. So these factors are very important to put on the table, and it's all part of good financial planning, good retirement planning, investment planning, tax planning. It all has to be looked at very deliberately, very strategically. But the bottom line is, it's about investing for income at high levels where you get high yields. And that's why, if you don't make the shift to high yields, to high income, to high dividends, to high interest from bond and bond-like instruments, if you're not getting this 5-6% consistent yield when you're taking income, so you can take 4 or 5% from your investments from the 4 or 5% dividends and interest that you're making, this is where you could have a problem where if you have low, on the other hand, if you have low yields and you have to dip into the principal, then if you dip into the principal, as in particularly if you have stocks and you sell shares, and as you sell shares, do you ever get them back when you're in retirement? Not when you are not adding money. If that's considered a double negative, I'm making my point. You're not adding money into your investments when you're in retirement. So if you're not putting money back in to be doing dollar cost averaging and buying more shares at lower values, and all you're doing is selling shares, and you are having to sell more shares at lower stock prices in order to get the income you need, this is how you can quickly cannibalize your retirement portfolio, your retirement investments. So I hope this is making sense and it's clicking, because it's key for it to click for anybody to have true success in retirement investing. So what is the fundamental thing you do? The fundamental thing is you must make the necessary shift from an accumulation phase strategy of investing to a distribution phase strategy of investing, where you have more stability, more preservation, you have more income. This is key. So to make the shift, I believe you first must start with the right mindset. Well, in order to get the right mindset, you really have to have the knowledge. Your money, your retirement, your life. It's your money, it's your retirement, it's your life. Get it right for you. Understand the power of investing for income, because most don't know what that means. And even if you think you made a shift where you made a change and you did a rollover from the 401k, 403b, etc., to an IRA, some of you may be saying, Drew, I made a shift. I made my shift. Well, I'm not talking about keeping within the same tax type, because what does that mean? The same tax type of investment. You have to do that in order not to pay taxes. You need to keep your qualified monies qualified. You need to keep your pre-tax money pre-tax, which is like 401k, 403b, 457b to an IRA. You have to keep that money the same when you do the rollover, and that's how you avoid paying the taxes, obviously. But the key, and Roth to Roth as an example. So what you want to focus on here is understanding that the shift doesn't mean, oh, I did a rollover. That's not what that means. It's key that you don't deceive yourself and think that that's what it is. It's about within the investment that you have in retirement, that you've made a strategy, an investment strategy shift that has more focus on income generation, which is find assets that have higher yields, higher dividends, higher interest, which is income. So that is fundamentally the key. And so first you have to understand the importance of making this mental shift so that you are then able to think to yourself, wow, it is different. I mean, step number one really is to understand there's a difference, because there's a lot of people that are not taught this, and they're dealing with people that sing the same song that they have heard for, let's say, 30, 40 years in their accumulation phase of life, their savings part of life. And then they get into retirement, and somebody they're working with, or maybe somebody even new, they sing the same song. Take on risk, you'll be okay, hang in there, you got to stay in the markets. If you don't take risk, you're not going to make any money. Stay put, look at how good the markets are doing. Donald Trump is so fantastic, and since he's so fantastic, and I'm not saying he's not fantastic, I'm just saying that what happens is this over enthusiasm that I talked about last week, and that's not sound and not balanced, and it's, oh, I have to hang in there, it'll be okay, there's volatility this past week, well, AI is the way to go. Well, I'm not saying that AI isn't a good thing. I'm not saying that Donald Trump is good or bad. I'm just saying you want to have a sound-minded thinking and understand this critically important mindset that has to be put in play first, and then you actually have to execute. When the execution is, you need to be working with an income specialist that is generating 5 to 6% in yields on a regular basis. Now, I used 4 to 5% earlier because I'm trying to be conservative. Just think about it net after expenses, worst case scenario. But I will tell you, our firm, and we do work on the Charles Schwab platform, the institutional Charles Schwab platform, and the institutional Fidelity platform as fiduciaries, as professional money managers. That's where we help our clients. And then we have the quote unquote universe of choices available to us, but it's all about selecting carefully through research and analysis the best investments to customize the needs of the client. So that is how you get, when you do professional money management that has a benchmark to get this 5-6%, that you should only be working with somebody like that. And if your guy or gal can't show you that, I would say you need to come in for a very important review and analysis of your portfolio, because it is your money, your retirement, and your life. And if you want to truly have the peace of mind and the comfort and confidence that you, I believe, all want, then you should get this checked out, because so many advisors, they're G guys. What's a G guy? They're growth guys. It's all about growth. And then what happens, if you've worked with somebody for a long period of time, you work with these firms that, when the markets are up, they're talking about how good and great they are, when all that's happening is the markets went up. And as soon as markets go down, they go quiet. Well, where's your guy? Has he called you? How many of you I got a big question for a lot of you. I cannot tell you how many people tell me, my guy hasn't called me. I haven't heard from this one, that one. I just had somebody in the office this week. Oh, this gal that sold me an annuity. She hadn't called me for 10 years. Well, a lot of times the reason why you may not be getting a call from your guy or gal is because you don't have a lot of money. So in today's world, a lot of these firms have such big heads in how they operate, and their big heads are all about big money. And their big money, and I know Vanguard put out a notice, because we have a new client that used to be invested with Vanguard, that if you don't have $5 million, you can't get their advisory services. And many of you may not be aware that the back office operations are looking for people that have 1 to 2 million at minimum. At minimum, a lot of them, it's like if you have 1.5 to 2, it's not good enough. A lot of them, it's at least 2 million. And I just told you about Vanguard. And so you're not aware of why you may not be treated like you need to be treated. I know in this firm, no matter what your dollar amount is, and I can tell you, most people do not have $1 million in their retirement portfolios. Now, you may, listening in, and that's good and great, and we have many clients with the multiple millions that we work with. But I will tell you, we treat the multiple $1 million client the same way that we treat the smaller client. I should really reverse it to make the point. We treat the smaller client the same way we treat the multi-million-dollar client. Well, why is that? Well, to everybody, their money is important to them, and it's what they have, and why should they be treated any less? A true committed retirement specialist, a true committed retirement income specialist is going to help people at whatever level it is, $250,000, $500,000, $750,000, $1 million, $1.5 million, $2 million, $3 million, $5 million. Everybody should get the same, call it, watch this, $20 million treatment. Okay, how does a large brokerage firm that's working with large clients treat the 20, 30, 40, $50 million client, which is there's not many of them in the world? I mean, we hear about all these stories, and Elon Musk and Donald Trump's a billionaire, and all the billionaires that exist in the world today, but it's a handful, relatively speaking. And it's a handful of people that have 10, 15, $20 million. Most people, a large percentage of people, do not have the multi-million dollars. And if you're one of those people, then hats off to you, 2 thumbs up, good job. However you have your money, hard work, blood, sweat, and tears, all of that, good discipline. But many of you weren't able to do that. You didn't have the incomes, you put kids through college, etc. Here's the bottom line. The bottom line is that, are you being treated for true retirement success where somebody's not just selling you down the river with stay put, you'll be okay, take on risks that you really can't afford to? That's why you need to make the shift for successful retirement investing by investing for income. It's all about income. All right, this is a long segment. I'm giving away the book, The Retirement Income Source. If you'd like to get a copy of this book, it's a great book by Dave Scranton. This is his second edition of his book that he wrote about 4 or 5 years ago. The Retirement Income Story, he renamed it The Retirement Income Source. It's a great book to help you understand the power of investing for income. That's what we talk about on this show. You need to understand this, and moreover, you need to make good and great decisions for you, and where you're not stuck. Don't be stuck in the accumulation phase. Don't be stuck in a methodology of investing that's like that phase. Cookie cutter mutual funds, too much growth, too much risk. All right, stay tuned for the next segment. You don't want to miss it as I develop this whole important concept that you have to get it right, whether you're 55, 60, 65, 70, 75, 80, 85, or 90 plus years of age. You can still make the shift and get it right for you. Don't get caught if we have another market decline. That's a key thing. All right, stay tuned. I'll be right back. Thanks for being with me today. You're listening to the podcast and radio shows, or one of the radio shows, that is all about you. It's all about your money, your retirement, your life. It is your money. It is your retirement. It is your life. Your money, your retirement, your life. Get it right for you. Understand the power of investing for income. That's what we're talking about on this show, The Retirement Income Source. I'm your host, Drew Pelton. Thanks for joining in, or thanks for continuing on as we talk today about the shift for successful retirement investing. Before I develop this further, I do want to once again give away this book, The Retirement Income Source by David Scranton. It'll help you understand the necessary things of smart, successful investing in retirement. I'm going to cover just quickly some of his chapters so you have a sense of what it is. But Chapter 1, Income Generation. Chapter 2, so what's the big deal about income anyway? Chapter 3, A Retiree's Best Friend. And I can tell you that it's income. Chapter 4, The Problem with a Growth-Only Approach in or Near Retirement. Any of this sound like some of the things I've been talking about today, or I talk about generally? Chapter 5, The Challenge with Today's Market. You want to understand markets generally. You want to understand market history. Chapter 3, Addicted to Growth. Chapter 7, Why Doesn't My Advisor Talk Like This? You want to understand this. I develop these concepts and thoughts for your understanding on a weekly basis. Let me keep going. Only 2 more chapters. Chapter 8, Have you outgrown your current advisor? And Chapter 9, Our Big Fat Hairy Audacious Goal, which I'll tell you is about helping people understand the power of investing for income. So if you'd like to get a copy of The Retirement Income Source, give us a call on 225-831-1394. Or if you're calling not during business hours, because that's our office line, then give us a call on 1-833-974-1833. That's 1-833-974-1833. You can call us 24/7. We have an associate standing by Not the same one, of course. And so we do have associates around the clock there that we outsource to. So don't hesitate to give us a call anytime. Why? It's your money. It's your retirement. It's your life. Get it right for you. We are talking about making the necessary shift to a distribution phase strategy from an accumulation phase strategy so you can be successful in the long years I hope and pray you have in retirement. You want to get this right for you so you have an abundance of income, and so you have an abundance of your nest egg. And what do I define as abundance? Well, first of all, basic bottom line abundance is at least preserve what you have and don't dip into principal. You want to grow it, of course. Abundance of income should be easily in this 5 to 7% range, which we can generate, I'll tell you that we do generate, that unfortunately most do not see or get in their portfolios. And income analysis is critically important for you and everybody. And I say that for clients. I mean, always have the recheck, and that's part of when you're working with our firm, Drew Pelton Investment Services. You get the opportunity to get regular reviews because things change. The world changes, markets change, tax laws change. And so you have to keep up with these things, and we do. So we need to get in sync with every investor that we're working with so that we're doing the best for them in their portfolio. If you'd like to have a complimentary review of your portfolio to see if you're taking on too much risk or to see if you have too much growth as opposed to having enough income at high levels, give us a call on 225-831-1394. That's 225-831-1394, and one of my staff will be glad to set up a time for you to talk with me off air, whether it's in the office, by Zoom, or whatever might work best for you. All right. Thanks for being with me this morning as we talk about making the necessary shift for successful retirement investing. You want to be successful. You want to win the Super Bowl. You want to win the Super Bowl every year, and you need to get that right so you can have the life of comfort and confidence in your retirement. Not one of dread, not a retirement of dread, not a retirement of fear and worry because you don't know whether your money's going to last. There are answers, and as I'm saying, either by getting a copy of the book or coming in and talking with us, again, call us on 225-831-1394. Visit us on our website, drewpelton.com. And then we have our other websites, Retirement Income Source, soundincomestrategies.com. Both of those will help you get more information on who we are, what we do, and why we do it, because it's all about you. All right. So let's keep going. I'm giving away the book today, The Retirement Income Source, to support what I am talking about today and virtually every day that I'm on the radio or the podcast. The Retirement Income Source by David Scranton, a great book to help you understand the power of investing for income. It is the guide to eternal income, to residual income, to renewable income. That is the key in retirement. That's the shift you want to make. So if you'd like to get a copy of that book, call us on 225-831-1394. That's 225-831-1394. We'll get that book out to you right away. Or if you'd like to talk to me off air, because you realize you need a complimentary review and analysis of your portfolio. Are you proceeding forth in a fashion which is income first, growth second? Because I would say this: if you are proceeding as you did when you were saving for retirement, when you were saving your monies, if you were proceeding in a fashion which was probably growth first and growth second and growth third, and there was no thought about investing for income, and you're still doing that in retirement, and you haven't made the shift from this growth type of an approach to an income approach, which is the wise and intelligent way to invest in retirement. And why is it the wise? And why do I say it is the wise way to go? Why do we as a firm say it's the wise way to go? Well, first of all, let me finish the thought. Well, if you don't make this shift to an income approach, then you may find that the way you were investing in the savings mode, if you continue that in retirement, that it backfires on you because you don't have enough in income and you don't have enough in lower minimum risk strategies. That's where you get into trouble in retirement. When there's too many advisors that they are parrots of the voice of Wall Street. Now, we as a professional money management firm, we do all. Now, let me just make a point. We have two chief investment officers that coordinate together, that sing the same song, that understand the balance of stocks and bond-like instruments, but we have a chief investment officer on the bond and bond-like instrument side. We like to call that the income side. And by the way, let me say I'm very proud of the fact that we were at a 7% return on the income side, which is strong when you start factoring in interest and appreciation and you're looking for stability and not having a lot of volatility. So on the income side, the bond and bond-like instrument side in 2024, we did 7%. Now, many of you would say, well, that's not the greatest return. The S&P did 24% or 23, 24, 25%, depending on who's giving the figures. Well, if you want to take on more risk in retirement, you can, and we can help you there because on the equity side, the stock side, that's Eric Byridge. So we have two Erics, Eric Lutton on the, meaning that Eric Lutton as the chief investment officer on the bond and bond-like instruments side, and Eric Byridge. Both of these gentlemen, I would put them up against anybody in America in terms of their backgrounds, their knowledge, their expertise in terms of sound investing in retirement. They understand money, they understand investing. Nobody can predict the future, but they know how to navigate the investment waters, the market waters, so to speak. And so Eric Byridge on the equity side, background in Wall Street, background in investing, and he knows stocks and he knows researching stocks and he knows the right way to go for retirees where most people want high yields. The bottom line is you don't want to manufacture income when you are in retirement out of a growth-only type of a strategy. That's where you get into trouble. It should be a income first and growth second type of an approach that gets the job done. All right. I'm going to take a quick break, and I'm going to share a couple of other things with respect to what you need to know to get it right, and what do you need to do to make the shift, and what is the shift for investing for retirement success. That's what I'm calling the show today. It's called Shift for Retirement Investing Success. Retirement investing success is based upon the income model of an approach that's income first, growth second, and income has got to be in the neighborhood of 5 to 7% in yields. All right, stay tuned. I'll be right back for the last segment of the show. You don't want to miss it because I'm going to share information with you that's going to help you get the job done good and right for you. Welcome back to the last segment of this show, or thanks for tuning in if you're just joining us, and that's fine. I hope to give you in a few minutes information that you can take to the bank, meaning that you can take to the area of success in your portfolio where you are improved and helped. So today on this Retirement Income Source podcast and radio show, I have been talking about making the necessary shift for successful retirement investing. Shift for successful retirement investing. Simply said, get out of the mode and strategy of investing for a growth type of strategy emphasis where it's growth first, growth second, growth third, growth, because what happens on the other side of growth? Often losses. Now, I know many of you are very excited about Donald Trump being in office and you believe the economy is going to be doing very well. Well, in this first week here, or I should say the second week of his office, or second week of him being in office, we've seen great volatility in the markets this past week, particularly with respect to NVIDIA. And there's been this new company mentioned, DeepSeek, and some of you are wondering what's going to happen. Well, I think it's going to take a little while for things to shake out. So what is fundamentally sound no matter what? Let me say it. It's investing for income. Income, where you're driving preservation, you're driving growth, and you're driving the income you need. So when you make the shift from this accumulation phase strategy of investing to this distribution phase strategy of investing, because you're in retirement, you need to take money out, you're not adding, you need high yields, high dividends. You do not want to manufacture income out of a growth strategy. Why? Because if the growth is in a loss mode, whether it's 1 or 2 months during the year, and you don't have high enough dividends, you may be selling shares of your assets, and particularly in a long-term down market, 1 or 2 or 3 years, if you have low yields in the neighborhood of 1 to 2%, like most mutual funds provide, this is where people start to run out of money because they're manufacturing income out of a growth strategy that has the other component part of it, which is the loss part of a growth strategy, because markets do go up and they do go down. And we may find there's still a lot of volatility in the markets this year. Now, I believe and hope that we may have this year in 2025, as I believe our chief investment officers believe, we still could have a good uptick in the market in spite of all this volatility. But you need to know how to do it so that you don't get caught where you have losses, or just simply said you don't have high income, high yields, high dividends and interest at this level of 5 to 6%. That's your consistency. And if you're not taking income because you don't need it, because you have a pension and or Social Security, or your wife or husband are still working as an example, and maybe you're retired, whatever your situation is, you want to know how this works. This growth-only mode can get people, and normally gets people, in trouble if they carry that forth throughout their whole retirement. So get the book, The Retirement Income Source by David Scranton. It'll help you understand what I'm talking about, the power of investing for income. In eternal income, reliable income, ongoing income is the message. You want to get this right, and you need to understand how to do it. And usually individual securities, professionally managed by a firm such as ours, Sound Income Strategies, is how to do that. I want to thank you for being with me today. This is the Retirement Income Source. I'm your host, Drew Pelton. I'm with you for an hour on the radio shows. I know some of the podcasts may be a little shorter, and they may be shorts or smaller clips, but I just want you to know that we are with you every Saturday and Sunday. Saturdays, I'm with you here on WBAI BRP 107.3, or on Sundays, I'm with you from 11 till 12 noon Central Standard Time at WJOB 98.7 FM or iHeartRadio. And if I didn't say it, on Saturdays, it's at 10 a.m. So Saturdays, 10 a.m. on 107.3, and Sundays, 11 till 12 on 98.7. Listen in every Sunday or Saturday, and I'm sure you'll get a lot out of this show to help you go the distance in retirement so you can have peace of mind, comfort, and confidence. Thanks for being with me this day. I'm glad to have you each and every day that you can. And be smart with your money. That is the key thing. And if you'd like a complimentary review and analysis of what you're doing, don't hesitate to give us a call. It's a no obligation review. It's a good checkup for you, I'm sure. All right. I'll be back with you next weekend or the next time you're listening in on the podcast. Have a good, great, and blessed day.